Right guys, what I'm going to show you here is this little thing. It's moving average. You've probably seen some of them anyway. Might be nothing new to some people, but I thought I'd just throw this one in. It's quicker for people who are still learning. It's just a little extra what you can add to your push lines if you bought the ebook. Alright, what I'll do is I'll do the normal thing what we do, what's in the ebook with the MACD, the crossovers, and then I'll explain a bit about it. So we'll put that in first. Like I say again, those who bought the ebook know exactly what we're doing here, or they should do there. So yeah, so we've got the crossover, which is an indication on this one that it's going up. So the price is going up. So basically, if you look at this is moving average. When the price is strong and it's bullish, as I said, you need these to be above this line. That's a good indication. When they cross over this way, it's an indication that the price is getting weak and the sellers are coming in. As it's underneath, it's weaker. So every time it was to cross over or be above here, this is when we were looking at some buy trades, whether it be looking at the candles or the MACD, as we're doing on this one. So anyway, I'll show you what I mean. So we've got a crossover here, which is, is an indication of going up. The candles on this one, it's just starting to cross over, which it has done here. So we'd probably be looking at a good buy trade, long trade on this one. So we'll mark off where it'd be, which would be on this second candle, so it'd be around about in this area. Now, as for your stop loss, which a lot of people ask, you look for your resistance areas on this first little bit. So as you can see, this is what we call a resistance with the stop, this area. So we'll make it easy, we'll stick a stop on that. And as profit, just for this video to make it easier, we'll just mirror the size of this, make it equal 50-50, 1-1, as this So if you look at this one, if you this is what you see originally, so it's starting the chart as it comes over. So as you took this trade in here, a buy trade, it goes up. That's it. So cut out on this side of your profit. So you see it's quite a, you're not always going to get it right, which is why we have stop losses, but it's quite a good indicator on this one. This helps as well because this here, these are your wicks. If you see something like this, that's also a good indication that the price is going up because the buyers are outweighing the sellers. Because it's come all the way down here with buyers and then sellers, come all the way down here with sellers, sorry. And then the buyers have pushed it all the way back up. It's been stronger. And that's why this one's like it is. So what we'll do is we'll have a look for another one just to get a rough idea. So we've got a little crossover here. I don't think it will much, but we'll have a look. This is for a sell. You can just sell trades as well if you want. There's not much on this one. So look at this other crossover for a buy again. Just using these for examples, that's why I'm looking at good ones. So again, we've got another crossover up on this. Second candle to start here, as you're opening. Put that in as if we took it out as the second candle opens, because we're above this line again, can you see? So this is nice. This is nice, it's above the line. So as soon as the next candle forms, it's open there, take a trade. Stop loss again, I think we'll probably, yeah, I think we'll have it, to make it easy, we'll put it here. Now, there's a few areas where I can see, but this is most obvious. And again, to save messing about, we'll make it about equal to that. And as you can see again, I know these have already formed, but you can see what would have happened. And again, it's gone up. We'll look at one more. And obviously, if you didn't use this, and you'd left it open, you could watch these for bouncing above this line. And then as it starts to, well, it's actually gone through the line on this one, so you may have come out here as it approached this line, so you'd have still had a profit. So as for coming back down again, we've got a crossover here for coming down. If you wanted to take a sell, or a short, let's call it. So obviously, if you're doing a sell, it's the opposite way around. You want them to be below. So your second candle, they'd be opening here because it's gone down, opened, down, opened, down, opened, like that. So run this one. Stop loss again, but this side because you're doing a sell, so your profit's on the way down. So if it goes up, it's your loss. So we'll do a tight one. Looking at these, put it back there, and if we did it equal again, you can see. In fact, looking at this, probably to do it properly, I would have done it. I more than likely wouldn't come in here. I'd come in this one because it's below. If you can see that one there. So we may not have done that one because it was still hovering. It had opened above that line basically. We need it to be under. So to be real on this one, I would have come in at this one. So we'll just swap that around a little bit. So profit wise, I'd like to say this, to be honest. Looking at the way it is. And then again, mirror that. So as you can see, it did come down. It didn't meet the line. So obviously at this point, this is when you would make the decision, because it's such a big gap. You'd make the decision then. And obviously if this went up and started to close, and then say you held a bit longer, and you think, oh wait, well this one, but then when this one closes, you can see again, got its long tail, so the sellers are starting to win. So this would be a good time to actually take it out, which would be not about this area, I think. Yeah, around about here. But it's still, as you can see, it's still being profit. So yeah, I think you'll see as you move along, they're all going to work out around about the same. It's not always exact. Like I say, got this here, crossover, sitting above. Again, this is your next opener because it's above. Set your stops to about these. And again, equal on that. You see, still above. Like I say, it's not always that perfect, but it's not about perfection. It's about having that, just that edge on it, just to get an idea. And then obviously stop losses you need to bear in mind. Ideally you'd want a good 60-40 split. So you'd want a bit more on this, a bit less on this. But you just have to work that out. You get used to that as you go along. So yeah, I hope that was somewhat informative. So I'll leave it at that for now.